I'm Charlotte McLeod with the Investing News Network, and here today with me is Jeff Wright, Executive Vice President at GoldMining. Thanks so much for being here today.
Yeah, thank you, Charlotte, for having me discuss gold mining and the gold market with you this afternoon.
Let's jump right in. Let's hear a little bit first about your company and the current focus right now.
Sure. Gold Mining is a company where we have put together over the past 7 to 8 years through acquisitions multiple projects spanning from Alaska into the Northwest Territory of Canada, all the way down to Colombia, Brazil, and Peru. Total resource base is approximately 23 million ounces of gold. 10.5 million of those ounces are measured and indicated. Another 12.5 are on the inferred side. Strong balance sheet. We have $8 million in cash in the treasury, and that should sustain our company for another 24 to 36 months going forward. The current focus for gold mining is focusing on some of our latter stage projects. Our most recent acquisition was the Yellowknife project in the Northwest Territory. We reestablished a resource just this spring. 1.7 million ounces of gold across all categories, open pittable grades of 2.3 and 2.4 grams per ton, near surface deposit, and in close proximity to existing infrastructure. In addition to that, we've also turned our attention to the São Jorge project in Pará State, Brazil. Very active mining jurisdiction, number of gold mines in the region and currently in production. Our project, São Jorge, is a later state project with defined economics. For a reasonable capex of about $125 million, you would, at the end of this, have a annual producer of about 100,000 ounces of gold, and demonstrating an IRR north of 46% at $1,500 gold price.
Okay, so you've been hard at work putting together your portfolio during the down days in the gold space. We're here right now at the Precious Metals Summit, and sentiment seems to be feeling better. We've got the gold price up. How are you feeling about gold right now and the gold space as a whole?
Sure. I would say the climate at the Precious Metals Summit in comparison to previous years is people and executives are cautiously optimistic. But at the same time, they're also cognizant that we're not quite sure what gold will, do in 2020. Gold prices right now right at 1,500. My personal view, it's going to move towards 1,600 with further, monetary easing by the Federal Reserve as well as the European Central Bank. But we're not counting on that. We've seen this phenomenon happen a couple times over the past 5 years, where you believe gold is moving back towards historic levels, only to be squashed. So we're being very cautious and prudent with our own balance sheet, not making any unnecessary moves right now.
Does the higher gold price affect you as a company in other ways? For example, are you seeing more investor interest? Is your share price moving? How's that looking?
Yeah, definitely. We've seen much larger, retail interest, not only in gold mining but in the gold sector over the past, 2-3 months. And I think that's going to, really continue. Investors are much more interested in the gold space. We've seen a number of generalist funds take interest, not only at this conference, scheduling meetings with our company, but, the overall investment climate does look like it's modestly improving. I wouldn't say we've returned to happy days yet, but, we're cautiously optimistic that, this could be sustainable and, here for the long run.
What signals would you look for to help yourself understand if we're moving towards something that's going to last versus a price that might go back down again?
Yeah, that's a great question. I think the signals that an investor would want to look for in gold, particularly is the move sustainable, or you're going to have a temporary correction in gold, would be not only looking at the interest rates but also look at the value of the U.S. dollar compared to the pound, the euro, the Canadian dollar. Another phenomenon that you should really pay attention to is steady and consistent central bank purchasing of gold. We've seen news that China just recently added another 100 tons to their holdings. As other central banks want to diversify away from negative yielding asset classes, you've seen more people go and seek out gold.
Okay, so those are some good things for people to be watching. What's your sense of the kind of financing state out there for gold companies? Is there money available? You mentioned been seeing interest from investors, but who's getting that money?
Sure. The investment climate for financing projects is not quite there as opposed to where you'd expect the gold price and the expectation to be. Larger institutional investors and mining finance professionals are still a little hesitant to commit hundreds of millions of dollars of capital towards a new gold mine. But we're starting to see those conversations, gradually develop. I don't think that you're going to see a rush of large capital back into mega projects in the near future, but maybe the longer term. I think the better pathway, and the pathway we've chosen, is to preserve our cash balance and look towards other potential avenues to monetize our assets, longer term, potentially through royalty streams or also joint venture possibilities.
Yeah, and let's go back to your company a little bit. What are any immediate plans or near-term things that you're looking at your assets?
Looking at gold mining, moving into 2020, we'll begin some of the permitting work at Sour George to move that further along the development pipeline. At the Yellowknife project, we are still looking at additional land claims on a regional basis to make that much more solid land package and do some of the low capital intensive work there at site. And lastly, in Colombia, we are actually looking at a modest drill campaign potentially in 2020, targeting some of the higher grade zones at the Lamina project. That could not really add ounces to the project itself because it has over 8 million ounces. That's a lot of gold, but identify higher grade zones to enhance those project economics for an eventual mine operator.
Okay, so it sounds like some slow and steady work at the project, trying to just keep doing what you've been doing for the last little while.
Yeah, exactly. We're also always on the lookout for additional acquisition opportunities, particularly in Nevada as well as Canada. We'd certainly like to add one or two more projects to the portfolio as we look to monetize some of the older projects we have in the portfolio.
Okay, that's a great point. What are you looking at when you are going out trying to acquire things?
The baseline for any project is that of credible size. Do we envision that this project could actually be an operating mine, in the future? It doesn't necessarily have to be the next, 4 or 5 years, but if I look 10, 15 years out, is this a project that has the merits, the tonnage, the grade that you could justify a mine at today's gold price? If it passes that hurdle, really the next parameter we look at is what's the existing infrastructure or their plans for infrastructure close to site or in close proximity to the actual mining concession. One of the things that we don't like to do is we haven't done, we don't take acquisitions lightly with shareholder capital and dilution. So last thing we want to do is be in the business of building out infrastructure to the tune of $100-200 million to build roads, to build power lines, to build electrical generation plants, or in some cases I've looked at projects where you'd have to build a port just to have a gold mine. That remarkably diminishes the overall project economics over the lifetime of a mine if you have to layer in an extra $100 or $200 million of infrastructure just to operate your mine. Our strategy is more focused on acquisitions in established mining camps with existing infrastructure and a labor force that is used to mining in that locality.
Thank you so much. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Jeff Wright with GoldMining.